This is the practice problem for exam 2. This problem uses a trial balance from Litton Company. Your job is to make the T accounts and show the closing process for the month. After you've done that, you will do the journal entries that correspond to those closing transactions. Here's your trial balance. The accounts that you will need in the closing process start here with Litton Capital and go all the way down through your expense accounts. These accounts include your capital account, drawing account, service fees, which is a revenue account, and all expense accounts. Now let's look at the T accounts. The T accounts are given to you and already labeled, so you will know which accounts are necessary in the closing process. What I have done is I have simply moved the amounts from the trial balance debit-credit columns and put them into the T accounts. You can do the same as your T accounts will be blank. Now, let's start the closing process. The first thing that we need to do is close our revenue account to income summary. So, here's our revenue account, service fees, and it has a credit balance of $20,000. So, to get the account balance to zero, we need to make a corresponding debit for $20,000, which I will show here. Now that we've made a debit, we must make a credit to income summary for $20,000. Now, the balance of service fees is now zero, B-A-L, 0, because we have two amounts that are the same, one a debit and one a credit. They cancel each other out and they make the balance 0. Next thing that we do in the closing process after closing our revenue accounts is to close all of our expense accounts. Here we have several. We'll start with wage expense. We have $11,700 debit and wage expense, so we need to make a corresponding credit that will bring this account balance to 0. Since we've made a credit, we need to make a debit elsewhere, which we will do in income summary, $11,700. Now, the balance of wage expense is now 0. This account is closed. Let's do the same for the rest of our expense accounts. $900 to rent expense, $700 to supply expense, $240 to utility expense, $1,800 for insurance expense, and $5,000 for depreciation expense. Now we have all of our revenue accounts and expense accounts closed. The next thing we need to do is foot income summary. Remember, when you foot an account, all you do is total up the debit side and the credit side. So first let's total the debit side. When we total it, we get $20,340. Now we need to foot the credit side of income summary, which we can do by simply bringing down the $20,000 as there are no other entries. Finally, we need to balance income summary. Since we have a greater balance on the debit side, this is where our balance will go. We subtract $20,000 from $20,340, and that gives us a balance of $340 on the debit side. This means we have a net loss for the month. Had the balance been on the credit side, we would have a net gain or a net income. Now, the next thing we need to do is close income summary. Remember, it is a temporary account. Since we have a debit balance of $340, we need to make a corresponding credit for $340. Shown here. This brings income summary balance to 0. Now that we've made a credit for $340, we need to make a debit, and the debit is going to go to owner's capital for $340. The next thing we need to do is close our owner drawing account. It currently has a debit balance of $4,000, so to close it, just like we closed revenue and expenses, we need to make a corresponding transaction of the same amount. Since we have a debit balance, we make a credit of $4,000. We've made a credit here, so we need to make the corresponding debit to that credit appear in owner's capital for $4,000. Now, all of our revenue accounts, our expense account, our owner drawing account, and our income summary account are closed. All we have left is owner capital. So now we foot this account. Remember, footing is simply adding the amounts on each side of the T account. So we have in debit, we have $4,340. On the credit side, we have $44,000. Now we need to balance the account. In this case, the greater amount is on the credit side, so that's where the balance will go. So we subtract $4,340 from $44,000 and we get $39,660. And that is our owner capital balance at the end of the month. If you would like to see the corresponding journal entries for this problem, please listen to the next podcast.